Hello, hello. Good morning, guys. Let's get ready to work. We have 10 a.m. news in a few seconds here. Wow. Some strong volume. What? Okay, let's see. Pushing. We're really pushing. What the heck? 10 a.m. news is crazy. Usually the ISM service really doesn't do this, but they're just using this as smoke and mirrors to push it up. You gotta get a mic. Is the mic bad? I do have an actual mic. Wow, okay, we really took out the highs here. Volume very soft. Alright, let's start with the bias. Like, that's a good idea. So it's a little tricky. We go on the 4 hour. We already tapped the 4 hour FEG yesterday, and we opened up moving lower, and the 10 a.m. news is bring higher. So the 4 hours like pretty tricky now. I would probably like lean downside overall because of all the closures, but it's still like pretty neutral here. The hourly, if we get a close in the hourly here, which is 11 a.m., would be more bullish. But this could be just a wick here. That's what it feels like to me. So we can't really say anything about that. Let's see if we go through this buy side here. ES really don't got much to go for now. Could be just going for the next high. We have a lot of imbalances ahead, so it's a little tricky for sure. I think the next closure, the next 15-minute closure, would be more telling. So I'm gonna just try to stay out until we get to the next 15-minute closure here. We close above here. We're gonna close above all this inefficiency here, and oh, we already took the buy side. Wow, it's pretty incredible price action. Very, very strong. The news injected a lot of volume, so let's see if we can get some trades going though. Volume very soft. I meant like just pressured with the 10 a.m. news. Yeah, I need to see a closure first now though. We're very high up there now. Good idea too when we tend to. Oh, what the hell? To do a average projection here. I'll do it on the 5-minute, and then we'll take a look on the 1-minute too. Look at the very low of the wick, all the way up to the next previous high. So the 5-minute, we can definitely go higher. On the 1, we're already like there. Yeah, this is tough. Went strong here. Took out this high. Just gonna try to see what we can do from here. We're still pushing. I'm waiting for a 15-minute close though. We don't really got much to go by. Lots of balance, and then the next high is like 150 points away, so it's gonna be a lot of fighting from here. See how more wants to go. I'll just mark this as a 15-minute bullish breaker, because that's kind of what it is here. But I gotta mark it in a way that I only want to see it visible on a 15-minute time frame. So we did sweep this low here. If it does come back into it, we're gonna look for longs in this area. We have the same thing on ES here. Very clean sweep. Didn't really give you any buying opportunity though. So what are we looking at though? Still pushing high, so just really stepping on the gas today, huh? When we move up fast like this, we can definitely see a retracement back down before we go higher. It's pretty, but we need to wait for a good reversal. We're giving away a ETF account today. Looks like this is gonna be an inversion here. Might get a mini breaker here. It's very easy to see I need to see it close here first, and then down here we could be looking for a 1-minute buy in the 15-minute point of interest. So right now we could definitely try a short with a tight wrist. Let me connect my thing real quick. Collect one my firm, and then have it all copied together. There you go. pretty quick price action right now. So wait our 15-minute close here. We still have a lot of to retrace back down to. Oh, we have the breaker on ES now. If we get a run back, we can look for a short somewhere. In this, likely in this BPR here. It's not really a BPR unless I move it down here, actually. The BPR is overlapping with it. Oh shit. I did not mean to do that. Let's try 70 sell here. Do a 2 stop. Yeah, I did not mean to do that. Hopefully I didn't lose any money here. Did I lose any money? Oh, same thing. Okay, cool. Little misclick. It's gonna be a counter trend, so we're gonna keep it lightly here. Can I get filled here? What the hell? Just one tick off. Stop could be at above the breaker, but I'm just gonna do it above the previous high here. I feel like that's comfortable to me. It's a counter trend trade though, just gonna be lower risk. Okay, there we go. Got my filled here. This is what it'll look like. Just put my stop at this previous high. It could fail because it's so bullish, but I think it's a very low risk trade. Just so I can the 15-minute closure. I can definitely see it come back and see the breaker before going more upside first. But yep, just 2.5 point stop. About like what, $250 if it takes out. It's more of an ambitious trade too, even though it's a counter trend here. It's bullish on the lower time frame, or bullish on the intraday bias now. You just have much more reward if this can do a rejection, this tiny breaker on the 1 minute. I'll give it a shot. It looks like it's trying to push higher. Let me turn off the labels so we can. There we go. Yeah, it's really slicing through it still. It'll take me out for $200. Took a loss there, 250. Was going for a 2-hour trade bare minimum and then want to go lower, but minus 250 on that exactly. Let me take off the labels so we can watch price now. Yeah, this is gonna push higher, so I just tend to give counter trend like very tight stops. If the setup gives, and then I want to project it towards where I think it could retrace and bounce to. But yeah, like this, if you try to hold for high day here, you're gonna take a little bit more loss. You're gonna take like 4 more ticks. Where's it from? About 5 ticks more. Instead of we can just risk about 8 ticks. But yeah, pushing strongly higher here. Let's give a wait here. And Q and ES is pushing higher together. 15-minute close already. So I still want a rebalance here, but we don't really have much to stop us until we get to these areas here. So we're still like at 80 points away. I would love to see it rebalance before it can shoot higher. But if there's a long opportunity somewhere, we can definitely go for 2. Still going. Another high sweep. Let me rechat. Is this indicator for a session? Do you mark yourself? No, this is here. It's ICT kills on and pivots. Is anyone here knowledgeable? Dave concepts. I think there's some people knowledgeable. Maybe someone else can speak on that. I really haven't looked into too much to it. Seems like they're doing decent or doing well. First order block here too. We're in a 15-minute point of interest here. Really feel that gap and nearly rejecting off this order block too. See what it does. Should wait for more confirmation before doing anything though. Just waiting here. Slow. Yeah, it does suck that 10 a.m. really inject liquidity to take out all these highs here. We really got not too much to work with now. Kept on moving lower and lower and lower. Didn't really ripped higher here. Where's the opening? Still moving. So strong move downwards, quick move upwards again. We're not gonna see too much resistance until we get to this area here though. gonna flip through the 5 and 15 here just to watch it closely. Yeah, so Asia kept on consolidating, accumulating. London's moved lower. And then New York, we really swept London high here at 8 o'clock, I think with the news. And then took the low. And then really pushing back up. Hello. We're showing the 15-minute point of interest though, but it's very shallow. We have only one order block on here. If it can hold price, maybe we can rebalance before shooting higher. But it's not much I could do here. It's really not much. This is, someone said my voice is very soft. Let me just replug my mic in. Is that better? Hello? Hopefully that's better. I'm not sure. Much better. I don't know what happened then. It's the same mic. Powell speaks at 12. Should page it in 5 minutes here. Wow, I was really pushing. Nico saying happy to see you in AM. Caught some of your PM session, but hate trading that session. Yeah, like I just default move away from AM if like London or overnight just already hit my draw liquidity or where I'm seeing and it's very unclear. Today we did take a lot of these lows here, but we had 10 AM news and then we still had some action, and then I think we had some equal lows down here, just right underneath. So like that's something I wanted to aim for. Daniel said, "Hey bro, I think you are one or perhaps one of the few that stream for free." Yeah, we've been streaming for free for like I think a month, a little bit over the month now, a month and a few days. Yeah, I'm just waiting for some A+ setups. We haven't had that in a while. I think it's also because we've been just messing around with PM's price action, which has been very, very slow, very tight. It's like, what can I really do with that? And then now we have AM's good price action, good movement. But with all this inefficiency, it's very hard for me to like really go for it. We don't really have much resistance until we get to like 450s, where we have like these candles holding it down. It could be this order block, could be this breaker here with down close candle, and have some consolidation here. So like all this inefficiency is gonna get really dragged out. There's just nothing really a step away. If any intention, like stop streaming on YouTube, not at the moment. I mean, I already bought some equipment to improve the streaming experience. We bought expensive camera and all that. I took the unicorn from 1010 5-minute chart. Breaker from 805. Let me check. 805. I don't think you would have got re-entry, no? Let me see. Fair value from 955. Oh, that's before the news. Okay. So like, you entered on this quick recap here. It didn't like that's the thing though. Like it needs to come down here for it to be the unicorn because it aligns with the breaker, and we didn't even tap the breaker. So that's like the problem for me. Like that's all I wanted to do, so I can get an entry, but it didn't really provide me that. But yeah, good. At least you got 60 points from it on 5 micros. Very profitable from that. Yeah, this is the only defense here, really. I'm just trying to mark it on the hourly. Yeah, there we go. That's not a 15 man, my bad. So yeah, we really have air until we get to this area. Then maybe we could look at something going. But we're in a premium right now. We do have lots of buy side up ahead here. Lots of equal highs. It could be going for that. I don't think we'll go for that this week though. We're way too far from that. And we really need to push another 200 points. That could be something that could be target for the week. Glad that you're trading the 5 minutes working. Adit said 490 for reversal, 490. That's around like the area that you could see some resistance, but like right now there's just nothing to stop it. It aligns with the new income gap too here. There's literally nothing to stop it here. I do want to see a rebalance though before moving higher, but it's just grinding up, itching up slower, higher and higher though. Yeah, any shorts would just be counter trend, and I'm just gonna have to make sure I have tight stops on it. I'm gonna take a quick bathroom break real quick. Be right back. Okay, we're back. Is it no real pullback? We don't. Yeah, we haven't had any pullback here. Yeah, I think there's like half the viewership in the stream just because I normally the last like 7 streams has been PM. It's kind of new to be in a AM stream right now, which is good though because we'll do a giveaway and that'll be much more likely that one of the core viewers can win. So yep. Look at Dixie moving lower here. If you want a chance to win, just like the stream. Very simple. We might just do one earlier on too. We could have one more push up before Ashley rebalancing lower. Or we could just push down here. Let's see. I think it holds here though. I wouldn't want to try short here. It should be more bullish. I can definitely see it coming down for higher prices. I don't think there's any good long opportunities here though. This is way too high for me to do 2 tight stops on it. But one more pop though, we can see. Keep pushing, baby. Come on now. It's not much to do by, right? They're just slow grinding up. What are you guys looking at though? Is anyone looking at any setups where they're trying short, where they're trying long? Just wait for the time being. Yeah, we're just waiting too. Do you know the difference from tick chart to time? I have no idea what that means. LT on the 15-minute. Yeah, we're looking at a premium discount. We're in premium right now, but we have no resistance to go by because we did do a strong sell-off. So selling is going to be very difficult. I don't want to go for a low risk or a riskier trade this counter again. Daniel said long if we inverse this 1 minute here. I'm starting to like that though. We're checking out some of these lows here. What do you guys think? Can we close above higher? Use this as a buy opportunity? Maybe stop below this. This is large stop that I want though. I don't want a 12-point stop right now. See that candle close first. What do you guys think long here? We already made some lows taken here. Wouldn't be a decent, bad long opportunity. If Graham is feeling short, I don't know. If it's short, it wanted short, it would have broke down here already. Just look like a long. Even those were long to highs, so we don't have any resistance above yet. This looks like a long though. This move is slow. I'm just gonna let it wait for a better setup. Take a buy. Is it mini buy side here? Pretty decent. Yeah, this is so slow. I passed 13 apex count, but I can't see in a past top step. The only thing with top step is the 50% consistency rule. This is so slow. I don't think it wants anyone to win right now. We have J Powell, yeah, that's right. We're trading AM today, that means no PM. That's probably what's true. That means I just won't live the PM. I'll likely just be on Discord trading it like I usually do. It depends. Like if the price action is not appealing, well, how I want it, I'm not even try. Nah, it's open to everyone now. All my things on Discord is open now. I'm just waiting. I'm sure there's gonna be some better setup coming up though. I'm just waiting for it. Like the longs look pretty good though. I think the shorts are still against trend just because also high time frames bullish, and we did try to tempt lower but failed, and now we're building some liquidity above here, some equal highs. Look, I think if I want to start shorting, I need like a 5-minute closure or something like that. At least it's a big 5-minute gap, but we're likely. Oh no, this is not it. You're taking shorts until we disrespect 15-minute PD raise. We're supporting it there right now. There's a lot of on the left side, but everything's bullish on the right side so far. I think it'll be easier to short if we violate one of those bearish PD rate going down or bullish PD rate going down. Yeah, I don't think that this whole like last 5 days, four trading days, whatever, even counting some few days from last week, I haven't really got a killer trade The losses have been very tight too, but there's just nothing to go by right now. But it's an AM session, so AM is different from PM at least. Yeah, we're stalling out a little bit. We do have SMT coming on here now. Yes, made a higher high here. I think we should see more upside to take the equal highs. Yeah, that's what we're looking for. If you played ES longs after closing the inversion here, it would have been profitable. On NQ, I have no idea. Like, it's so disgusting, NQ. What does the 30-second show? Absolutely nothing. This is PM price action right now. We're barcoding more. I don't know. I really need to just get back to AM, because if we had had we manipulated 10 AM news here before expanding higher, we could have looked for an entry and then ran with it. But joining in without any entry model on 10 AM is just too risky, because it could be very beneficial to you or it could go just sideways. So like, there's no shot I'm trying that right now. Hi from Israel. Waiting into the short. We're not short anywhere right now. We're waiting for a setup, but we're probably waiting for these two NQ and ES look to run up to the breaker here to look for something. We don't have any resistance on the left side here because we sold off, leaving lots of inefficiency, and we're just rebalancing them, and maybe we could see something coming into here, but it's a maybe right now. I'll have to just mark things. If this is really bullish, we can just keep on shooting higher and higher, but like it's not efficient to move price without rebalancing lower before going up. So that's why I was looking at a rebalance to the previous breaker. It's far though. We got close, I think, on the 5 here. So this is the breaker here. We moved down. If we just came a little bit more here, I've been very bullish upwards. That'll be a good entry model there. We shouldn't want to do that. ES gap to 52.82. What's that? 52.82. Was I missing something? 52.82. What kind of gap is it? I have no idea. There's a move high. It took a while. Like if you were long, you finally got the reward for it. I was looking for longs, but it just got stalled out, so I chose not to. Oh, we're getting some volume here though. Some movements. Holding it instead of coming to 11 a.m. Maybe in the next 10 minutes here when the macro time. We're approaching this area now. I'll be watching for some resistance here in these two breakers on the 15-minute. I like to rebalance back down before really pushing higher to this buy side. You went long on that FEG, this one here. Oh, it's a regular hour gap. Okay, got it. I think we're just keep on going up till we move to this area, which I'll actually make it visible in one here, just for us to see it now that we're closer to it. Is that what I have here? Yep. New weekend gap here too. Okay. How does he write the 3 words at the top here? It's just a trading checklist indicator. I just type whatever I want on it. When's the 4-hour close again? 2 p.m. Yeah, we close above this 4-hour here. This is gonna be very bullish, and I can definitely see this smash to 600 the rest of the week. How's the hourly looking at though? We just got hourly close. Hourly close is bullish, very, very bullish. I think we move higher first. Move a little bit higher. Oh, the fearless thing? Yeah, it's AGFX watermark. That also pairs with the time frame here. Okay, we might be getting something real quick here. I don't want to do a premature short. I'd rather get longs until we hit this area. Yeah, longs down here should have been. Yeah, it was way too choppy though. Where would have? I'm having a problem with holding my trades. I was winning 4 winning trades today, this morning. We can talk about your trading style. Like, what kind of trade are you entering off of? Like, what's your model? Is it breakers, inversion? Is it, what is it? And then, what's your size? Are you doing like 2-3 minis? Or are you doing micros? And then we can also talk about like your typical stop size. So if you, let's say I enter long here, my typical stop would be like 10 points. And then what's your typical TP? And then we can break it down there based off of that. And Q did blast off of this order block here too. 251. Where'd you see 251? What time frame are you looking at? We're probably looking at the same thing though, just different time frame. You gotta make a phone call real quick. The giveaway will be AM. We'll likely do it in like 20 minutes here. So if you want to answer, just like the stream, and then we'll get ready to roll. Oh, it is daily. Yeah, okay. It's basically the same thing. It's just reformatted. What do you suggest? Hit TP, stop loss, or take some partial? I think I need more context than that. What does that mean? Are you in a trade right now? You're asking me if you should exit? I think that the goal in your trading, though, you just want to be able to, let's say we were to enter this long here on this inversion, maybe the retap of it more so. My stop is like probably like late on this low, 10 points, right? And I'll go for at least this high here. That'll be where I would put break even stop. Either that high or this previous high here. That'd be 1-1 at least. And you can take a TP, you can take a partial, do whatever it is, and either you shift your stop break even, or you keep your stop the same. I'll likely do a break even stop, and then you want to have your trade set up where like you can just walk away. You can go to the bathroom and then come back, like it hits stop, whatever. It keeps on going all the way up to 44 points, like near where I'm thinking it will come to. Then you can just keep on holding to it. And then this is where like you either set break even stop continuously, or you just raise your break even stop as you go. I don't know, I can't do that here. You can move your break even stop higher and higher depending on like where it could snap. But you got to be very strategical about that, because it could just do a simple retrace before going higher. Pretty good for upside here. Should have went for the long for sure. Can you explain how you structure premium discounting every day? So the premium discount is typically like, you can do it on whatever range you're dealing with. So you can do it on multiple time frames. The way that like I like to do it, like I like to look at the higher time frame. Since I'm trading the 1 minute, I'm looking at 15 minute as my bias. You're looking at the previous swing high, swing low here. This is simple. 50% is equilibrium. We're at premium right now, but that doesn't mean like we're only looking for short. We're also looking for alignment. So we're gonna see where it could form a reversal at. And for me, it's likely in this unicorn here, in this breaker inside this 15 minute. And that'll be deep premium here too. And the same thing, if you're trying to trade like, let me see. This is not a good example because we had a lot of news already. But same thing with premium discount here. Like let's say you were bullish after I made this low at 928. Doing a simple premium discount. This, you're looking for buys that are in discount, and then vice versa. If you're looking at shorts, you're looking at in premium. So if you're bullish, you're looking for longs at the equilibrium here, under it, and then move higher. That's just like a rule of thumb to help you stay on the right track. But like that doesn't mean you don't take a trade if it's not in premium or discount. That's just more of like it helps you stay on the right track. If you're bullish, look for longs in discount to have like a better risk reward. Okay, we're likely gonna push higher here. My NQ struggling gets ES. She's not gonna lie, like this price action is making me a little sleepy. We haven't really done much, just waiting. Do you follow metal? Heck no. Please don't. Please don't try to get me into doing metal, oil, corn, any commodities, any crypto. Let me just do NQ and ES and let's just master it so we can get paid in it. Heavy metal. Been pretty slow all week though. Yeah, Powell. It might just be gripping until Powell speaks, and then it could really show some moves. I could definitely just see Powell just say like hello, and then just dumps like 50 points. Powell speaks at 12, I'm pretty sure, right? Thank you for the kind words, Mario. Just a plan. I just really want to get some good trades going. Like we used to. Definitely the first I think like first 2 weeks of my live stream on YouTube, we had like a crazy streak, and like every trade we hit was a winner. It's like, whoa, what the heck's happening? And lately, it's like I'm trying to, nothing's changed. I'm trying to do the same thing, but it's been more difficult. I'm just waiting for that setup that allows me to do like a 10-point stop and then go for like 30 points with a higher win, like with a slight edge over the 50%. I don't want to do a premature short until we get to at least the point of interest I want, though. My voice is cracking a little bit. Alright, I'm back. I used 2 minis with a 4-point stop loss. Is this ES? It can't be with NQ, I'm pretty sure. Yeah, so use 2 minis. 2 minis is very tight because what you're allowed to have is what is it called? 1 partial and then 1 target. Oh, it's NQ, never mind. Crazy. I mean, that means you can just leave breaking stop on. But I think the question you're asking is like, let's say you do 4-point stop, you take 1 TP at 10 points. That's already like 2.5 RR. and then you get the last one off at 20 points, 5 RR. You're like, it went another 100 points. Why did I sell? You really have to think relative to your stop size. So for me, let's say like I'm trading like 2-point stop on ES. Once it gets like basically 6-8 points, I'm all out. Like even though it goes like, there's so many times where I do a 2-point stop and then I get like 4 RR, like about 8 points, and then it goes like 20 points down in the next 20 minutes. You gotta keep in mind, like I was risking like only a few $100. I made like 800 already. Like I'm not gonna keep on be like risk 200 and I could have made 2,000. I could have made 4,000. So that's the thing with that. That's like, I think that's like more of a greed thing. If that's how you're angling it with like, how can I hold it? As long as you're targeting like 4-point stop, going for plus 8 points, plus 10 points, you're already set. Just take that multiple times, increase your frequency of it. It depends though. I don't know your win rate with it. Like, is your win rate like 20%, 30%, and then you need to go for like a higher target to make up for it? It's a greed thing, man. Like, it happens to me all the time. But what I've been preaching on live stream though, like, there's so many times, like, you can go back to my previous stream, like I'll do a 2-point stop on DS and it goes 8 points. I'm all out on. I think that's the only video I made. I'm all out on it, and then it later just dumps like 20-30 points on ES. So that's like crazy. The same equivalent would be like, I take TP at 20 points on NQ, and then, or 30 points on NQ, and then it goes like 80-90 points in my favor. Just nothing I can do about it. Because what you always want to remind yourself is, you could always anytime re-enter if you were still like bullish or bearish on that setup. So you can take your TP, like let's say at whatever it was, like 20 points, and then once it comes back up, or once you think it's bearish again, just re-enter. So we tapped the very tip of it. Interesting enough. I might just be going for very tight counter trend again, unless we get like a nice sweep so I can look for longs. I'm not gonna long up here yet. So bear with me though, like if I'm trying to do very tight stops, trying to go for counter trend, you don't have to do it, but the risk reward will come if it's correct, and I might add to it. This is a good time to actually try only working on evals, to be honest, but I think I'm just gonna work on funded still. We have some lower liquidity moving downwards too. I might just take it also at ES. ES definitely helps you mitigate your risk just because it's so tight. If we get a closure under here, that'd be good. What I hate though is the market just looks like it's just been moving in a way that it's just trendy. So I don't know if it's even gonna give us a nice reversal to get us a trade entry. But this could be something like this, like a 1-point stop. I am more than happy to do this. I'll do 3 minis since it's so tight of stop. I'll do one more above. And then all 3 just smashing out right here. I gotta go pee again though. I think I've been drinking a lot of water just talking. Basically a 1 point stop right now though. If I lose this, it was at $100, 150 bucks. These type of trades though, I'm really going for more of a bigger move down, but it looks like ES is coming back up already. I could move it 1 tick up just to be safe because it's so tight. I'll just leave it. I'll just leave it. I wonder if this is gonna be my downfall. Try and do like a 1 point stop, 1.5 point stop, and then just getting burned out of it. Like it literally could be my downfall, just losing $100 every time. Yeah, this is definitely taking me out. This is so tight of stop 1 point. Oh my goodness, I don't know why I'm doing it. It's $125 lost there. Well, let me just do the math here. If this was correct, minus 125 on the there, and then this was here 2.5. This would have been like 300, even just hitting this one. Yeah, it's like I said, don't follow me if you're not comfortable with it. I'm still waiting for A+ now. This is not it. It's interesting though. 1 point stop. If that definitely went in favor. I would love to put it above here though, just because it's previous high. But still trying to protect myself. But if you don't believe me that sometimes it does work, there's many streams where I'll do a 1.5 point stop and then it'll go for like 6 points and I'll hold through it for 6 points. That is not one of those days right now. It's ES too. ES is very strong. I think we come up here though before we. This should be the area that we're aiming for. We could be seeking for longs on NQ now. NQ's been a little bit more weak though, just sketchy. I would hate to see NQ work here. That just means I just chose the wrong asset and I chose the stronger class. Because same thing here, it would be like a 3 point stop on it at the same setup. Or I could just move it up a little bit, 4 points, whatever it is. Let's say just like 3.5. Imagine this works. It'd be disgusting if it does. We had a nice reaction off of this though. We have SMT too. Damn. It looks like it could work here though. I'm just gonna remove it though. I should just be... Solar blocks holding here. We close above this inversion here, so this definitely works there. Let me just see if I want a long. I'm just gonna put it down here and I'll drag it up just so I have it ready. no confirmation to play down yet. Just shopping back and forth. There's a move there. We're about to hit 11:30 here. We're gonna be longer. close here. Refill this FAG. Rebalance this inversion here. Looking for higher. There it is. So we have London closure there. Are we coming from hourly breaker? Is this the hourly breaker you're talking about? This could be the hourly. I would rather look at the 50 minute though. The 50 minute is more clean here. It shows more structure. It aligns closely. I think the hours lead down and 50 minutes above here. That's a good efficiency to have to watch. I am going to take a bath or break real quick. Price is unreadable. It's pretty tough. We're just waiting. I want to play something, but I think it's a good time to do right now is do a giveaway. I forgot about it. I'll give you guys 3 minutes here. 3-4 minutes. Giveaway. Just like the stream, comment your username. Probably like 11:37 or something. you guys a few more minutes. Dave NQ, any trades today? If you want to see our trades, this is what we did today. Just a few seconds ago, we did 3 minutes with a 1 point stop on it. Minus 120 bucks, I think. 125 at 2 weeks per spice. We tried this on this bearish breaker here once we close above this sweep. This strong displacement below on the 1 minute at that. And then this is a short stop at 79.5. Entry at 78.75. That's the only thing we really got so far. What indicators are you using for macro? It's just macro tracker by 2 degrees. Just type that in trading view. Alright, I'll give you guys another minute here just to get the rest of the entries in. There's really not that many people entering. I think a lot of people probably left. So far the bot counted like 54 entries so far. That means you got like a pretty 2% chance. Do you use TradingView to execute the orders? I use TradingView to show. I usually just trade on NinjaTrader though, but since my trade copy is on NinjaTrader, you can hook it up to TradingView, and anything you do on your leader account, it'll copy through for everything else. Okay, that's good enough time here. Just roll it here. Winner for today is ICParpy. ICParpy. Congrats to ICParpy. You know the last few giveaway winners, I think some of them aren't in the US or like in a country where it's against the rules to trade with, so they weren't able to win it. Some of them probably just gave it away to someone else. Others said just pass it on, and then that's what we did too. Yeah, maybe I'll actually post all the indicators I used on Discord. It should be on Discord already. If you look at my Discord, go to pin messages. Most of the indicators I have should be listed, like ICQ pivots here. Bless me. Congrats to Parpy. Yeah, Powell speaks at 12. That we might just have to let Powell speak first before we do anything. Yeah, Parpy, just give me your DM me on Twitter or Discord, or just say something in the general chat or something. Do one of the above, and then just tell me your username that you're using to contact me. So I think we gave away about like 20 plus accounts this last, maybe like over 30 people now. So some days we did 2. So like about, let's say 30 people. That's a lot of people. Especially when we're averaging about like 20, like 200, 250, 300 people. That's like 10% of people got a free account. And half of them aren't even like cheap accounts. Like Apex are cheap accounts. It could be only like 30 bucks. But other like My Fund Future Elite, they're end of day evaluation, and they're like 80, 90 bucks. Pretty good value. And they're sponsoring the stream. So I hope no one's just staying on the stream just for the giveaway. But it's just more of like a gravy thing. Yeah, but there's just no trades. I really should just wait for PM. Knowing Powell, if I looked at the forced calendar more, Powell speaks at 12. I should just trade after Powell. That's where I transitioned to only being an APM trader, though. Pretty much. This is interesting here. If we can display slower, we'll get a 5-minute setup. And an hourly point of interest too. Quite interesting. You take any trades? We've been watching, but I'll share once again. This is the only trade I attempted, really. It's a unicorn trade here. It's on the 1 minute. It's very tight. So this is the breaker here. I did a 1-point stop on it. I entered on this FEG at 78.75. You can see 2 minis, and I add another one. So like 3 minis total at around 79 average. Stopped at 79.75. So about close to 1 point, close to 4 ticks, 4 to 3 ticks. And I was trying to aim for this low, about 2.5 OR. Oh, what the heck? We moving so slow that sometimes when we get moved like that. Alex, I don't have to trade breakers inside a macro. That is not necessary. If it's SMT and like let's say this time right now, there's no macro this time, I could still take the trade. Getting some movement here. I want to see if we get some good trades coming soon though. They might be. Let me see. Parpy, can you confirm your username? Okay, your username is Parpy. Okay. Just if anything, just. And it works. Are you profitable? Yeah. I mean, if the last 12 months, very, very profitable on it. I think just there's gonna be days where it's like sloppy, but the days that it works well on, you get A+ setup, very low risk and good reward. Okay, gotcha. I gotcha, Parpy. I'll talk to you after stream, Parpy. Powell prediction. I low-key would like a run into this 15-minute inefficiency here inside the breaker, and then I knowing Powell, he'll say something and just gonna do a rebalance. He's gonna dump all the way back down, something crazy, and then maybe he'll come back up. But I'll be shocked if he says something and it just keeps on pushing up. Because we've been just pushing higher and higher, nonstop. Maybe we'll stick around for Powell for a little bit. How do you manage your risk on evals? It's the same trading style. It's just gonna be like increased size. So if I normally do two contracts unfunded, I'll do 5 on eval, just to expedite the evaluation. Just because like if you trade a lot unfunded already, and you've been trading for years with prop firm, you don't want to waste your time trying to slowly build up, slowly build back up on eval. You want to put your time and energy on funded when it wears real, but eval, like I could just throw it on non-farm payroll with a large size. I could care less. Risk management. Yeah, you just want to have a certain risk tolerance. So like if you're per trade, you're trying to risk like $100, $200, keep it that way. Have a hard stop set. So let's say you long here, you're bullish here, you long here. If your stop is this low here, just keep it that way. ES is just consolidating here. Pretty slow day so far though. It's so interesting how ES is moving though. We're just keeps on building liquidity. This looks like a rebalance for higher prices when Powell speaks now though. I thought they're gonna save this when he speaks, but we needed to move lower to move higher. Move low to think people was gonna sell off to go for the real target, which the target's still not hit yet. When does Powell speak? 12 in like 12 minutes basically. I'm kind of looking for a long setup right now, though. The Lux algo is just calling for a unicorn bearish one. We have lots of highs above. I'm gonna try to wait, see more confirmation first, if I can. Ideally inside this 5-minute here, and this order block will hold it. How long does Powell speak for? Does anyone know? crap. Luxago undefeated, baby. Alright, we're in this 5-minute put of interest here. He speaks for only 10 minutes, or you say he speaks at 12:10. I thought he speaks at 12 flat. Yeah, but finally we're rebalancing. What a sell. Oh, okay. Force challenge says 12:10. Maybe I misread it then. Let me check one more time. 12:10. Yeah, right. Yeah. How long does he speak for though? Does anyone know? Let's get those order block codes here. Anyway, we're just really waiting. I showed the one stream setup we did with a 1-point stop on ES. He speaks for a whole hour. Volatility for a whole hour. This sell, man. The moment we are not in for it, just because it's so choppy and like we did. This could have been one here. We've got a breaker set up here if it does come back up. Really didn't do that though. So it's really accelerating now. Damn, why now though? God damn, moved too fast. I was hoping it could stay before Powell a little bit first. Took liquidity here though. Took internal. The hourly inversion, let me see. Which one? That hourly inversion for longs is the move in my mind. This inversion here, this is a large gap. This short we did at 79, we just did an appropriate stop, like 2 points, 3 points. Great job in the 50-minute here. What are you waiting for? Just confirmation anywhere. We have tenant Powell speaking very soon too, so we're watching the volatility and seeing if there's any setup that we want to give us. When we deal with the short though, like, we gave such very little retracement and just like a straight shot down. So we move down, do like a quick 2-point up, down, 2-point up, strong down, 2-point up, down. There's not much I can really enter from there. I wonder though if this is the top now though, for the time being. I really wanted to move up here before I took some trades against it. But look at premium discount. We're in deep premium right now. We have to really move back down to this 50-minute before we look at longs again. We're pretty overextended. I have had a good setup on the last while, man. We've just been waiting. No, we're accelerating well. Very, very trendy, man. No way you're still in that 1 point short from earlier. This is the 1 point short he's talking about that I actually got out. We shorted like 79 here and stopped out 79.75. It went like a few ticks above. If I just did appropriate stop, it would have been fine, but I didn't really get a good reentry. We have some relatively equal highs here too. It's not that good for reentry. But if bulls want to step up somewhere, I'm waiting for it. Let's see how we're doing premium discount wise. We're heading back down here. So we have the high here with the low here. We went to the low, we went to the high, just like near the area. And we'll be seeing what it wants to do back to equilibrium here. What's up with the giveaway? We just did a giveaway 20 minutes ago. Just close it short. Good work, man. That was kind of just like a meme short where it's like, okay, 1 point stop. Either it hits my stop, which it went over by a few ticks, or I go for like 7 points. If we in versus 1 minute, I'll be more interested in longs here. But Powell, man. Powell's dangerous. We're still in this 15-minute point of interest here. Should be holding here. Let me move to the side. Put this up. What time is Powell speaking? In 7 minutes, 12:10 Eastern time. Powell's prediction. I have no prediction. I literally have no prediction. It's selling off before Powell speaks, though. What I predicted earlier was like, Powell's gonna jump on, and if we're still up the highs here, he's gonna say how low is gonna just dump, and then maybe once like it kind of clears up more, it's gonna really go to where I wanted to see. We were shy of the target by a little bit. It did hit the breaker though, right? It tapped inside the 15-minute breaker here. We were just shy once again by like 6-7 points. No acceleration through it. But we'll witness it. I mean, I don't really typically trade when Powell speaks though, so hopefully it's nothing too crazy. Let's comment your prediction. What is gonna happen the first 2 minutes when Powell speaks? Up or down? Let's see if the viewers can get it right. What color ties you? I think it's gonna be a quick down initially, and then it's gonna run up, just for the hell of it. Just same thing with James Anderson saying minute position down, then up. So trendy, man. So slow. 2 minutes. Wait, is he speaking on video? Maybe we should put it on, just for fun. Is it Yahoo Finance? That's...
Largely on two things. It focused on the school's role in promoting leadership responsibility, is what the title of this work, and it focused on civil discourse. And this is written in the spring of 2021, and I'll just read you from the first three paragraphs of this the report that was written at the time, and which I just thought was so apropos of
Let's do that.
Today.
Maybe that's
said,
fine.
the Stanford GSB must prepare students for the responsibilities of leadership. To be clear, preparing students for leadership does not mean prescribing a particular set of values.
Music's too loud. Yeah, I'm trying to just see a good balance because I can't really hear it myself.
Policy, the social responsibility of business, that is something they must decide for themselves based on their own values. But we do have a responsibility to make sure we thoughtfully engage with these questions and have the knowledge to make informed decisions. And I think that's a perfect introduction to today's event. We're not here to receive answers, but to learn.
Hello, Ash. Good afternoon. Hope your day is doing well. Hope yours is doing well today. Hey, it's trading patiently. Hello, man.
Have an agenda that tackles a fascinating set of issues. So, thank you all for being here, and I hope you all have a great day.
All right, come on, big man Powell.
Now, to get things started, I'm going to introduce our first speaker, who's Federal Reserve Chair Jerome Powell. Jerome Powell, Chair of the Federal Reserve, was appointed in 2018.
It's going to be...
he has had quite an interesting 6 years at the helm of the Federal Reserve, as interesting as any Fed chair in
He hasn't even came out yet.
Although there have been
Let me
quite
just
a few
make sure I fast forward just so I'm up to date.
He has guided the Fed with a sure hand through a global pandemic, supply disruptions, an incredibly dramatic fiscal expansion, a lot of asset market volatility, first inflation,
hype him up,
magnitude in many years, and somehow we've emerged with the U.S. economy continuing to create jobs and be the envy of the world. And that range of experience, as well as Chairman Powell's responsible leadership, make him a perfect first speaker for our event. He is going to share some opening remarks, and then he's going to be joined on stage by Arvind Krishnamurthy. Arvind is the John Osterweiss Professor of Finance at the GSB, and he is himself an expert on asset markets, financial intermediation, and monetary policy. So with that, it's a pleasure to welcome Chairman Powell to the stage.
Let me see if I can, how do I?
Thank you very much, Dean Levin. It's great to be here today. Thanks to everyone for coming out. It's a pleasure to be here. So I'm going to begin with some comments on the economy and the road ahead for monetary policy before briefly discussing the Federal Reserve's monetary policy independence and then joining Arvind Krishnamurthy for
How do I do the
some
video?
discussion. So over the
Sorry,
past
show
year,
it.
inflation has come down significantly, but it's still running above the FOMC's 2% goal.
Oh.
In February, headline inflation was 2.5% over the past 12 months based on PCE index. A year ago, it was 5.2. Core inflation, which excludes the volatile food and energy components, stood at 2.8% in February. A year ago, it was 4.8%. So this is very welcome progress, but as you can see, the job of sustainably restoring 2% inflation is not yet done. Tight monetary policy continues to weigh on demand, particularly in interest-sensitive spending categories. Nonetheless, growth in economic activity and employment was strong in 2023, as real GDP expanded by more than 3% and 3 million jobs were created, even as inflation fell substantially. This combination of outcomes reflects significant improvements in supply that offset to some extent the effects on demand of tighter financial conditions.
4 hour on this.
The healing of global supply chains helped address
Yes, it's
pent-up
moving pretty
demand for
decent.
goods,
Wait, how?
particularly in sectors that had faced considerable shortages, such as autos. In addition, labor supply increased significantly thanks to rising participation among 25
This
to 54-year-olds,
FAG here, the first one that's created.
As well as a strong pace of immigration. Recent readings on both job gains and inflation have come in higher than expected. The economy added in an average of 265,000 jobs per month in the 3 years through February, a faster pace than we have seen since last June. And the higher inflation data over January and February were above the low readings in the second half of last year. But these recent data do not, however, materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving down toward 2% on a sometimes bumpy path. Labor market rebalancing is evident in many parts of the data.
Let's go, Powell. Pump.
Quits, job openings, surveys of employers and workers, and the continued gradual decline in wage growth. On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. We've held our policy rate at its current level since last July, as shown in the individual projections that the FOMC released just 2 weeks ago.
Where's that guy that says bulls are stepped in?
The policy rate
where is he?
At its peak for this tightening cycle. If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year. Of course, that outlook is still quite uncertain, and we face risks on both sides. Reducing rates too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. But easing policy too late or too little could unduly weaken economic activity and employment. As progress on inflation continues and labor market tightness eases, these risks continue to move into better balance. As conditions evolve, monetary policy is well positioned to confront either of these risks. We are making decisions meeting by meeting, and we'll do everything we can to achieve our maximum employment and price stability goals. And that brings me to my second topic. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. Our success in delivering on these goals matters a great deal to all Americans. To support our pursuit of these goals, Congress granted the Fed a substantial degree of independence in our conduct of monetary policy. Fed policymakers serve long terms that are not synchronized with election cycles. Our decisions are not subject to reversal by other parts of the government other than through legislation. This independence both enables and requires us to make our policy decisions without consideration of short-term political matters. Such independence for a federal agency is and should be rare. In the case of the Fed, independence is essential to our ability to serve the public. The record shows that independent central banks deliver better economic outcomes. We recognize that we need to continually earn this grant of independence, and we do so by carrying out our work with technical competence and objectivity in a transparent and accountable manner, and by sticking to our knitting. By technical competence, I mean that the Fed policymakers use the most up-to-date information and research to deepen our understanding of the ever-evolving economy and to reliably deliver on our assigned goals. We're supported by a highly capable staff. We also draw on the insights and experiences of a wide array of business, academic, community, and labor leaders, as well as others engaged in the economy. And by objective, I mean that our analysis is free from any personal or political bias in service to the public. We will not always get it right. No one does. But our decisions will always reflect our painstaking assessment of what is best for our economy in the medium and longer term, and nothing else. Transparency and accountability are fundamental for any government agency in a democracy, but are especially important for one granted policy independence. The Fed has a special obligation to explain ourselves clearly, to describe what we're doing and why we're doing it. We're always striving to improve this communication, and it is a job that is never complete. But we've come a long way. Before 1994, the FOMC did not even announce monetary policy decisions. Today, we announce those decisions and we explain the thinking behind them in our post-meeting statement and press conference. We publish detailed minutes of our deliberations and a quarterly summary of economic and policy projections of each FOMC participant. We publish a monetary policy report twice a year, and the chair appears before Congress to present that report and to answer any and all questions that are on the minds of our oversight committee members. In 2020, we completed a year-long public review of our monetary policy framework, and late this year, we will begin just such another review. My colleagues and I explain our views on the economic outlook and monetary policy in speeches like this one and in visits to communities around the country as part of an extensive outreach in which we seek input from individuals and groups throughout society. Transparency is an affirmative and proactive commitment to the public. Lastly, to maintain the public's trust, we also need to avoid mission creep. Our nation faces many challenges, some of which directly or indirectly involve the economy. Fed policymakers are often pressed to take a position on issues that are arguably relevant to the economy, but are not within our mandate, such as, for example, particular tax and spending policies, immigration policy, and trade policy.
Let's see this close above.
Climate change is another current example. Policies to address climate change are the business of elected officials and those agencies that they have charged with this responsibility. The Fed has received no such charge. We do, however, have a narrow role that relates to our responsibilities as a bank supervisor. The public will expect that the institutions that we regulate and supervise will understand and be able to manage the material risks.
I low-key want to get along right now.
Which over time
We do
are
come back
likely to
inside.
include climate-related financial risks.
But
We will remain alert to the risks.
I don't
that will be
usually
pressured
trade Powell,
to
so, like,
expand that role over time. But we are not,
See.
nor do we seek to be, climate policymakers.
I don't know if it's
In
even trying
short,
to get a sense
doing our
right now.
job well requires that we respect the limits of our mandate. Thank you. I'll stop there and look forward to our discussion. Thanks.
He's still speaking, right?
Thank you very much, Chair Powell, for those remarks and for taking some time to be with us and talk to us today. There's a lot of stuff going on in the world today. I think we have a lot of stuff to talk about, so I'm going to get right into it. Before I get started, I just want to also thank you to the audience for sending questions over. What I've done is I've tried to organize the conversation around two themes. One, we'll start by talking about the macroeconomy, and then you have been
The trade subscription ended? What does that
a
mean?
very tumultuous period over the last 5 years, and I want to talk about the leadership challenges around that. So let me just dive right into it, pick up on something you started talking about, which is inflation. 2 years ago, we had inflation readings close to 6-7%. We've come down to 3% last Friday. The PCE inflation index, the personal consumption expenditure inflation index, which is something the Fed often speaks about, came in at 2.8%. We've had a conversation about this. There's so many factors that have been play in the economy over the last couple of years. I wonder if you can just spend some time talking to us about what you think are the key factors that have brought inflation down over the last 2 years.
Sure. So I think I'll start with where we think the inflation came from. So what is actually different this time, at the risk of making that statement?
Okay, I figured out how to do this now. Let's go.
That this inflation wasn't strictly just a question of demand overheating and the Fed coming in and having to suppress demand. That's been the more typical pattern, perhaps on the back of a
figured it out.
a shock such as oil price shock and that kind of thing. This episode actually also involved, as everyone
All right,
will
let me see.
recall,
5-minute breaker.
the collapse of the supply side in a lot of ways. So supply chains stopped working. There were shortages of critical things like semiconductors, which turned out you couldn't make cars. I think many of us might not have realized how many semiconductors go into a car. In addition, there was a major labor force
looks good lungs
shock.
right now.
So we lost several
We
million
manipulated
people
pretty
out of
well
the
down
labor
here.
market. So that we had
Let's see if we can get
very
a
severe labor
decent entry, though.
shortage. So it was a supply side issue, as well as overheated demand from the closing and then reopening of the economy at a time when rates were low and fiscal policy was very supportive of demand. So we had both of those things. And therefore, if those were the causes, what we needed to see was both the unwinding of the pandemic-related distortions to both the supply
Yeah,
and
once
demand
we
of
have
the
this
economy,
order block
and also the
flip
effects
here
of
and
tight
hold,
monetary policy.
this is very
So
good.
today, what we think we're seeing as inflation has come down sharply over the last year is those two factors working together.
What do you guys think?
And
Look for longs. I don't think I'm looking at shorts right now.
We think that tight monetary policy weighing on
I'm
demand
in a BPR.
actually
Do I
gives
not
the supply
see
side
that?
a better chance to recover. And
Where the hell is this
2023,
5-minute
of course,
BPR you're
was a
talking about?
year,
Up here?
as I mentioned, of very significant
looking for shorts right
supply
now.
side recovery and expansion.
And what are the factors that you're keeping an eye on, say, over the next few years, maybe the next year or two, that might play out in the inflation picture?
I should also mention inflation expectations, which in our framework and in the thinking of most monetary economists, people think that having the public expect inflation to return to 2% despite it
We did
moving
tap
up,
in this
that's
5-minute
a very
version here.
important factor in bringing inflation back down. In a sense, if people believe that price setters and wage setters in the economy, if they believe that inflation
I just
will
like
be 2%,
longs right now, though. We manipulate
that'll
under,
actually
inversed up.
happen. So as we look ahead, though, one question is how much more juice is there to come out of the supply side recovery? We got a very large increase in population last year, which may have helped with inflation. It certainly helped with output. And an increase in potential output.
I might
at the
just
same time,
try a long right
income
here.
was growing 3.1% last year.
Let's go 30 second.
Around that, we also had inflation coming down sharply. So there may be more
that closure
supply
first.
side gains to be had. Surveys of businesses
Damn.
still show
Kinda missing
difficulties
this.
in hiring people, different difficulties in getting the inputs that they need for their businesses. So there's some more benefit there. We also think that monetary policy is tight. It's weighing on interest.
I don't want to chase this up all, though.
In the economy.
That's why I don't
So, for
trade
example,
Powell. Like, I'd rather wait for the
durable
setup
goods survey
instead of, like, let it
consumer
deliver
interest
fast. It's like,
rates
okay, I'm
is
bullish,
up
I'm bullish.
by durable
Let's
goods
go, let's
because
go. And
rates
then,
are high. You also see the labor market rebalancing because you can look at demand in the labor market as well as supply, but you see demand reflected in lower job openings, a very small increase in unemployment, in wages moving back down toward more sustainable levels. So we think those two forces that I mentioned will be the ones we'll be looking for. And the thing we'll be looking at, of course, is the incoming data on inflation as those affect the outlook. And the same thing about the labor market. What's happening in the labor market? Does it suggest that the labor market is continuing its progress, and it's made substantial progress?
want to hold this
to get back
FEG
to,
here, not
a
get to this
sustainable
low.
level of wage growth and balance between supply and demand.
Can I just dig into the inflation expectations point you mentioned? An analogy that people drew a couple years ago was to the high inflation episode of the 70s, where we had a high inflation period that then ended up shifting expectations, and through the wage price mechanism ended up
Let me change this so you guys can
a
see.
sustained period of high
There we go.
inflation.
Should stay in the bottom now.
In
This
the
not-
current
If
situation,
it's closed under, I'm not looking at it anymore.
I guess I have two questions.
Well, I should look
How
for a flip.
concerned are you about maybe inflation getting stuck in the
So we're between
upper
two
twos, around
large
3.
entities right now.
Could
And
that
inside
last
this
mile be very
inversion,
hard
we inverse
because
this
inflation
one.
expectations getting stuck? And then
Filling both sides right
relatedly,
now,
are
so
there
this could easily
things
flip
you're
right
looking
here.
at to tell you,
And I'll be looking to see
to
it
signal
when
to
flip
you
here.
that is an issue or isn't an issue?
Right. So as I mentioned, inflation expectations we think are an important part of driving actually inflation. And we want them to be at levels that are consistent with 2% inflation over time, not 3%, but 2%, not 2.5%. The good news is that that's where they are right now and pretty much have been for some time. And we look at surveys of businesses, households, forecasters. We look at other kinds of measures of inflation expectations, and model-based and things like that. We also look at market-based.
If I'm long, if I'm bullish
for
right now, this is something like I'll be looking at. Stop at this very low. But if I'm bullish or bearish, though, I would want this to be a close lower than quick retap.
And all of those are pretty
to really
consistently
press us
saying
back down.
that the public does believe, and it's a good thing because it's true that inflation will
Two
go
areas,
down
like
to
two
2%.
things I could be
So
going
that's
for.
very
And
assuring, but that's partly because of the very strong action that we took, and also because of
I'm looking
our
at this
ongoing
order block
commitment
here. If I'm like
to
30 second,
actually
I'm looking at
return
the
inflation
latest
to 2%
order block
over
candle
time.
here, and it's been
So,
holding.
and that is our commitment, by the way. But over time, so I would say it would
go
be a
back to the 1
concern
minute here, though.
if inflation expectations were not to be consistent with the outcome that we seek. But the good news is they're not, and I think our commitment is understood and respected and believed by the public, and that's as it should be.
Let me flip to the other side of the equation. We've had employment, economic activity that remained quite strong. The unemployment rate it's remained below 4% for the last 2 years. And this is during a period in which you've took the funds rate from 0% to 5.3% in about as fast a rate hike cycle as we've seen in history. A year ago, many people were talking about possibility of recession. That hasn't happened. Again, you made some remarks about this, but I wonder if you can just go a little bit more into this. Why hasn't this happened? Why have we achieved what looks like a soft landing, which is inflation coming down, unemployment remaining low? What are the factors that have played out? And then the related question, do we think this will continue to happen over the next year or two?
Yeah, so I guess I've always had the view and always said
5-minute closure in like a minute.
because of the unusual origins of this inflation and its differences from other prior episodes, there was a path to getting inflation back down, restoring price stability, getting inflation back down sustainably to 2% without the kind of large job losses and increases in unemployment that had been typical of prior tightening cycles. And the reason, again, was that some part of this was independent of demand. If you have to get all of the inflation reduction gains from suppressing demand, the chances are that will involve that will weigh on employment and economic activity pretty significantly. But here we had the situation for again semiconductors. You couldn't buy a car at the very time when people wanted cars because they were moving to the suburbs, because they didn't want to ride on public transportation because of COVID. At that precise time, the supply of cars went down dramatically because of the shortage. So what happened is the prices went way up. That's how the market clears in our economy. So on the other side of that, though, without respect to demand, once the semiconductor supply comes back, you should come right back down that curve, and you could, in principle, get inflation down significantly without just ignoring demand for a second. Mm-hmm. So I always thought that was possible, and I would say something like that appears to be happening. Sorry. So then your question is, how did that happen? So more recently, we expected that to happen at the very beginning, and that's why we thought the inflation was transitory, meaning it would go away quickly without much effort from us. That turned out not to be the case. And we thought then that was in 2021. In 2022, we thought the supply side would recover more. It really didn't, and I certainly began to wonder whether that was going to happen. And then it really happened in 2023, right about the time we were almost ready to give up on supply side recovery.
I like upside. I just can't.
Significant increase in labor force participation.
Should have looked for this entry here on Thursday.
A significant move up in immigration, and you also got the unwinding of the supply side problem. So what's happening is when that happens, potential output is going up significantly. The economy's productive capacity. So you have a situation where productive capacity is going up even more than actual output. And so the economy actually isn't becoming tighter, which it ordinarily would. It's actually becoming a little looser, and you're seeing inflation come down. Very unusual situation. The pandemic has been, a textbook of unusual, unexpected developments and situations. But that really is the story. And then Arvind, the question is, how much more are we going to get out of the supply side recovery, and how much will fall to demand? And we just don't know the answer to that. We're not going to prematurely assume that there's no more progress to be made on the supply side. Indeed, the evidence is that there probably is more gain to be had there.
You had mentioned immigration has been a big part of the last year or two in terms of the supply side. Can you just expand on that? Is that how important is that relative to supply chain? Where do you see that playing out in the next year or two?
So I need to start by saying that the Fed is not an immigration policymaker, and don't comment on those who do have that assignment or the policies that they make. It's really we're just calling the balls and strikes on the economy as we see them. And so from that standpoint, our economy's been short labor, and probably still is. If you talk to, and we do talk to a lot of business people, it's still difficult to hire for many companies. So we've needed more people. But what happened over the course of last year is, to a much greater extent than had been thought, immigration moved up quite a bit over the last 2 years. And this is typically the Census Bureau does all this estimating. The Congressional Budget Office actually went and took a different path and talked to the people who work at the border and that kind of thing, and got a much higher estimate, which now many groups have gone out to validate. And I would say it's clear there's something there. The numbers are actually higher. And that actually explains what we've been asking ourselves, which is how can the economy have grown over 3% in a year where almost every outside economist was forecasting a recession? An overwhelming majority anyway were forecasting a recession for 2023. Not only did that not happen, we had better than 3% growth. So really a remarkable performance, and some part of that is that there are significantly more people working in the country, but then how does inflation come down? It's because the capacity of the economy has actually moved up perhaps more than the actual output. So it's a bigger economy.
We've been trying to long for 2 minutes. It's really true, man. I'm not forcefully trying to play.
We don't make judgment calls, but that's what we're seeing.
Powell in front of everyone. I would hate to join in and then he says something bad.
And unemployment. We have talked about real factors. Immigration,
this is also outside
chain,
my trading zone, so I'm kind of just more commentating right now.
Really
unless I see something clear.
Rates, per se, which is of
We're
course
just grinding up. Like you could just play order blocks right now.
With the Federal Reserve.
You see the bearish order block here, held here.
Looks from the outside.
Likely the next one is going to hold if it do come back down to 26. Stock could be at 19 here, or just under this inversion.
There's also, you look at the economy, that look like there's very differential impacts across different parts of the economy. The housing market. People have long-term fixed-rate mortgages, so interest rate pass-through there is very low. Here in Silicon Valley, we have.
I think Daniel said he was shorting for the fun of it, and then he's looking for longs after. That was a good switch if he even did.
It looks like we have a much bigger impact. So I wonder if you can speak about the interest rate sensitivity of the economy this cycle, and then another question, a related question, which is we have differential impact across the economy. How do you think about balancing the impact of interest rate hikes in different sectors?
So, I guess the headline for me would be that I do think monetary policy is working and working broadly as expected. I think you can point to sectors of the economy, and you mentioned a couple. So if you're a household that has a low-interest mortgage, you're not feeling the effect of higher mortgage rates. And many companies as well took the opportunity to term out their debt before rates went up. So you have a lot of companies that have longer-term fixed-rate debt at pretty low rates, and they're not as affected by it. That's all true. At the same time, again, if you look at interest-sensitive spending, either in housing or durable goods, you're seeing very significant effects there. And I do think you see the economy rebalancing. So I think it's not right and maybe too soon to conclude that there's some significant disconnect there in terms of monetary policy transmission. But it still leaves the question of how the economy can have grown over 3% during a year in which the federal funds rate is at a quarter-century high. Why wouldn't growth have been lower? And to me, the answer to that is the supply side recovery. I think that's what people need to understand, is that you have this force from outside. It's not just interest rates and demand. You've got a supply side recovery that is creating new demand and new supply. And that's why you get a number like 3.1% at the same time inflation is coming down. One of the reasons.
He's talking for hours.
So
Yeah.
I think that's really the story. It's not that the policy isn't restrictive, and it's not that the economy is not responsive to rates. It's that we've had this outside force that is temporarily affecting that.
So if I benchmark Fed policy right now, we have rates at 5.3%. Inflation is running a little bit under 3%. That's like a 2.5% real interest rate. That's really the real cost of borrowing. Compare this to pre-pandemic, we had real rates of close to 0, maybe 0.5%, sometimes negative. So we've gone from a very low rate environment to a very high rate environment. Policy looks tight right now. Another benchmark, I don't know if my colleague John Taylor is here, but the Taylor rule is a typical benchmark we use for thinking about a central bank policy. And by the Taylor rule, policy rates right now should be around 4. So policy does look quite restrictive right now. And I think in talking about where policy is right now, you've said that the risks are balanced. Why continue to have tight policy in an environment in which the risks are balanced?
So we do think that policy is restrictive. We think it's doing its job. I would go back to what I said in my remarks to start, which is,
did Powell even
we think
say
the risks are
anything
too
bad?
sudden. So there's a risk of if you cut too soon.
What is
risk
the
that
title of
progress
your?
on inflation
I
will
can
stop,
share it.
or that even it will reverse, and we've seen that some
This is a
historical,
link to it.
particularly in the 70s. We don't think that's what's happening here at all, but that's a risk that we have to manage. The other risk is that we wait too long.
He just
or move
talking
too
and-
slowly. Once we do move, and in that
What
case,
reaction is this? Did he say something?
you have weakening in the labor market and
Weakening in the labor
output.
market.
So
I don't know if I
we're
heard
trying to
anything
steer
else
between
that-
those two risks. Obviously, we're trying to be in the middle and get the timing right. It's very challenging. There is no.
I would hate to have some analysis
risk-free
long and then
path,
boom.
But, and
But
I think
yeah,
we're in a
I
position
should have
to
also pointed out this
address
breaker here.
the
I showed it like
economy
when it was like
in
moving
either
down
of
from
those
it, but
directions.
this is what we talked about when we were
the
streaming at
risk, though,
1140
of
here.
moving too soon
This is what the
really
short we
is that
wanted to
the
get, but we
economy,
didn't get it.
really does. The deflation does move up, and
Wow.
it really would be quite disruptive if we were to have to then come back in. We will do what we have to do to get inflation down to 2%. But again, it's about balancing those risks. It's never the case that you can confidently look at the baseline and say, this is what we're going to do. It's always about having a baseline understanding, but then knowing what the risks are and having the committee be in a position.
I
to
feel like this is
address
still
those
long,
should
though.
they materialize, and I think we're very much in that position.
Let me
now.
just see if I can get a lower setup.
Maybe I can just follow up on that. So
Don't think inflation is.
I'm going to ask a question. Is
reversing
there a
higher would
signal
be
or a
quite
data point
disruptive.
that you're paying particular attention
That's
to
what
next
you said?
year? And I'm going to ask it this way. So if you had a crystal ball that you knew could perfectly answer one question about the next 12 months, what question would you ask it? What's the thing you really want to know?
Sorry, there's no one thing. It really is. We have a dual mandate. You're asking me to be single-minded about the dual mandate.
No, just a kind of a data point that you think will guide you.
Can't do that.
He said he can't do
we
it.
have to,
Market's gonna die here.
I would say this. In our framework, the two goals, price stability and maximum employment,
But
are
for
equal
real,
in the law. But
We did get a closure on the 5
our
minute here, and
framework
now we're
literally
just closing a
says
little over here.
that if you're
Go to
very
seek and
far
destroy,
from
basically,
achieving
but
one
I
of
do
the
like
goals
longs
and the other
overall.
one is pretty
It's
much at goal,
higher
or
time frame per
better than
section.
goal, then you focus on the one that's far from goal. This is obvious, right? So, and that's what we did after inflation came up in March of 21, and then we really had a very tight focus. And you heard us talking about, getting inflation under control. But as inflation has come down, the two things are moving back into balance. And we're not a single mandate bank. The key thing I'll end with, though, is price stability is it gives us the ability to achieve both goals. If we don't have price stability, then we're not going to have these long periods of tight labor markets, which benefit everyone. What we saw in the 10-year, 8-month expansion that ended with the pandemic was, for the last 2 or 3 years, the people at the lower end of the income spectrum were getting the largest wage increases. And you saw the gaps between black and white unemployment go to historic lows. So a tight labor market over a long period of time does enormous social good. And that's what we all want to do, is we want to get back to that. For that, you need price stability. But so the two of them actually are quite complementary.
I'm going to shift from just talking about the near term to the thinking about the longer term for the U.S. economy.
I just don't want to get
big
burned in
shift
front of
in
everyone.
growth
Like, I think if I was
expectations
trading,
long run growth, this comes out
although
from
maybe I
the
would
Fed's
have
own
been more
projections
ambitious
as well
long,
as
because
from
I've been looking for
economic
longs for a
forecasters'
while here.
projections from 15 years ago.
And taking this lows,
Long-term growth
manipulating it
forecasts
here.
were 2.8%, 3%. Pre-pandemic,
But
they've been below
any
2.
word
That's kind of where
policy
they've been for long-term
moving
growth
this much
forecasting.
this quickly,
That's where your own forecasts have been.
pretty disgusting.
Why do you think that is? Why long-term growth at 2%? We're sitting in Silicon Valley. AI is all the buzz here. We've had high growth over the last few years. Is 2 a reasonable number? Is it possible we could go back to the 2.83% that we had in the early 2000s?
So let me start by saying that
I think it'll just kind of retrace back down, like a slight retrace,
difficult to forecast.
and then really
there
rip
isn't
back
one
up.
that's more difficult to forecast than productivity, for example, which is one of the key elements of longer.
If
term
not,
growth. So
no retrace at
very,
all.
very,
Or
very
we're looking
uncertain.
for
I mean,
longs already at the
basically,
bottom.
longer term growth is a function
They're
of growth
short
in
at
hours worked and a
331.
of output per hour.
18.3031.
And hours worked is really a function of demographics. And
Or you talk about
mobility also.
4331.
Productivity.
Hopefully
output per hour
4331.
is
You're not down
highly
that bad,
unpredictable.
are you?
So I think people lowered their longer run growth expectations to around, I guess, 1.8% is the median, something below 2%. That's given what had been our very low population growth and expectations that productivity might be 1.5%, 1%, 1.5% kind of thing, productivity growth in output per hour. That's a pretty good place to be. We've had higher productivity than that recently, and the question is it going to be a sustained thing? Are we going to enter into a new period of higher
This should
productivity?
keep on
That would
ripping,
be
though.
great. It is productivity growth that lifts, all boats.
Kind of want to look for
generation
longs
upon
if I can get
generation.
anything at
And,
all.
so people argue AI can be that effect. Some people are arguing that there were a lot of business starts at the beginning of the
Let's go look for long right here.
pandemic and during the pandemic.
Let's do a buy stop here,
As Americans
and then
went out
I'll put my
started
stop
businesses at
like
that
6
time.
points if it does move
And
past
also
this.
that you've seen a real.
I'll just go
you've
to
seen a
one.
lot
Let's
of
just try
change
with
in the
one.
labor force, so people moving, quitting, going to better jobs that might be better suited to their
Let's
skills.
just do buy stops too.
But all of those things, they could become
move
a
the stop
longer
right
run
at this wick here.
productivity increase or not. Those might just be the things that we need to get 1.5% productivity.
Much be better if it comes back
And
down
they
and
might-
then
it's just-
do a
is
low reversal,
unknowable.
come back up
And,
though. That'd be
particularly with
perfect.
AI, the range of potential outcomes.
My stop would be moved
it should
to this
increase
slow now
productivity.
if I get filled
Everyone
here.
sees that, but that's not what we're seeing in the numbers now. It's too soon for AI to be
I want to
effective
pyramid into a long somewhere though.
productivity numbers, but the logic of it is that it could actually increase productivity, and then the question will be, what does it do to labor?
If it takes out this high, I'll
Does it
put regular stop
replace
on.
labor or augment labor or both, and in what
Right now,
sort of
I'll put
proportion? So
stop
hard
here.
to say about longer run growth, but of course it would be great if that were the
It's like a
case.
5-point stop.
And then just to follow up, we talked about this before. Do you feel like you need to take a stand on this in policy making it current?
No, I mean, so our focus, the things that are really important to the U.S. economy over time are productivity, immigration, even trade policy, industrial, the things that we're doing,
1 minute.
industrial policy
What am I doing here?
that is now a thing. Those are
Okay.
important. to the
Maybe
longer
I just
run
need to stay
growth,
out.
economic
Let's just end the stream then.
And what we do, we can.
I'm
what
starting
we
to get
do
FOMO
is
because
we
I was
try
like very
to
bullish down
move the
here,
economy
and I want
towards
to pyramid
lower
into.
prices
I still
and
think we can
maximum
move higher
employment
from here
through
as
the
long
business
as
cycle.
we don't
That's what
violate
we can
anything
do
down here
with
now.
interest rate, with
But I'm getting a little impatient for entry right now.
monetary
I
policy.
do
We
think
are
we can
also
move
a
higher from here.
crisis responder. We're a
Maybe if
really
anything,
important
I'll
crisis
just post setups
responsive
in
responder.
Discord.
We can get there quickly. We have great tools for it. So that's
But
a key thing
overall, I
we do.
think it's
We
high. I think that was
also
a quick
regulate and
climb.
supervise the banks, and it's important. And we look after financial stability.
We're starting to
All
build
those are very
liquidity up here,
important
too.
things, but they're not things
And
that affect
overall,
the longer run
my
potential
closing note
of
will
the
be
United States.
this 15-minute
So,
FEG here
Honestly, though, so
and
the-
this
the
breaker.
question
I
of what will
really
be
think
the-
we move
the
up here as long as we don't get a
equilibrium
close
interest rate,
under
the
this
neutral interest
15
rate
minutes.
going
So
forward
while we're
doesn't
above it,
really matter for
my
policy
objective is
today.
this high here.
We're really asking about once the pandemic is well and truly behind us, and we're well into the AI.
Feel free to yeah.
investment boom,
It's in
the
my
effects of AI.
description.
What will that look like? And it
Kinda
doesn't
mess
really
around too much
matter
here.
that much for getting
Following.
inflation down to 2% while keeping the economy growing and the labor market strong.
Can I shift tax and talk about?
Go take a sip of water. Go take a sip of water and just gonna go 50 points up.
So, just in our discussion, and it's clear from looking at the world, you've had
Yeah.
so many
If you
different
go
shocks.
in the description, go to the bento. There should be a
Economy
Discord
behaved in
link.
so much unusual
I'll
ways
just
over the
post any
last,
trades I
few
take
years.
there.
You were
Overall,
appointed
like I
Fed
think
chair in
if it does
2018.
retrace back
I
to here,
remember
there should be a good long.
Pre-pandemic, the dominant concern of the Fed was low inflation, not high inflation. It
Still
was
pretty bullish here.
having inflation below
now.
target, below the 2% target. COVID
I wanna
happened.
see if I
we've
can
gone in a
give one more
completely
shot,
different
though.
direction. So, can you just speak about the challenges of taking an organization that was focused on one thing to focus on
Let's see if
something
it wants to
completely
come
different?
for one more attempt here.
Yes, it's certainly been a turbulent time, I will say. To Dean Levin's points, it's been really a lot of things and things that weren't
Julian,
expected.
on my
You know, for
Discord, I'll
20
post my
plus
analysis and
years
whatever
around
trade
the
I'll
world,
usually post before it comes
the
of the
economy
setup
suffered from
in the Discord
lower
chat, the main
interest
chat.
rates, lower inflation, slow growth, low productivity, bad demographics.
Structure clear short from
and
the supply.
a lot of monetary
I think
economists
we're looking
were
for higher
working on
time frame. We really
how do
wants
you
to keep
make
on
your
continue
tools
higher.
work at a time when you're going to be bounded by zero, and you won't be able to cut and make and
This is about
support
launch
the
here.
economy. So this was a big that was a big thing, and then the inflation that came, it really arrived in the first quarter of 2021 was a surprise to most people, and again the macroeconomists generally thought that it would go
As
away
long as it
over
just
time,
doesn't
not
break
everyone,
this
and
low, I
there were
guess.
some concerns expressed, and ultimately it is coming down significantly. So that was
Pretty
we
sloppy.
had to
Trading today.
pivot on that, and we did. When it became clear, really in the fall of 2021, it became clear through the labor market data, the inflation data, the growth data.
Yeah,
that the
I really
economy
need
was
to
not
wait for the
moving
setup.
back
I'm
toward
getting
price
too
stability.
FOMO because I'm
And
sitting
we pivoted,
the charts for
and
too
when we
long, and
pivoted,
that's
we
why I
really
try to
moved.
limit myself for
So
2 hours.
because,
Now I'm like
that was
looking
the
for
right thing to
longs.
do.
I'm mid bullish, and
So
I'm
the
forcing
good news
setups
about
here.
monetary
So
policy
I'll
is
just
it
end
can
this
move
here.
quickly.
I'll be in
The
Discord,
emergency
guys.
tools we have, as I
If you want to
mentioned,
join the Discord,
are agile
let me just share a
compared
link real
to other
quick
government policies.
to make it easier
They have a
access.
significant effect on the economy. So I think we've gotten to what is
I'll see setups for PM
pretty good
probably
place.
after 1:30
We're
though.
using our tools now to try to
There you go.
try to bring inflation down the rest of the way.
And
to
I'll end this
2%
time here.
while keeping the economy strong and the labor market strong as well.
I mean, the other side of the stimulus.
Yeah, my fault if I was
kind
kind of FOMOing some or trying to force some of the entries. I don't think there was a single like good setup today, and it's just me trying to like do one trade or one mini something like that, just to
over
see.
the last 6 years.
But I really
including
need to
from,
restrict myself from doing that when
former president. So
we get like
how
Powell
do you
speaking.
navigate the,
Well, at
the
least risk
decision-making
management's
of the Fed in the larger
good
scheme
factor
of
there.
the pressures coming in from the outside?
So the thing is,
Okay.
internally, we have peace of
let me
mind
type
on
in
this
chat.
because everybody who works at the
I'll
Fed knows that we're going to do
be
what we're going
back
to do, and we're
after.
going to do it for economic reasons, and that's it, as I mentioned in my remarks. And I mean, I think you can